Hey everyone, and welcome back to Around the Block. I'm your host, Jasmin, and today I'll be bringing some points that are trending on the cryptocurrency market and globally. So let's go ahead and get into it. But before we do, don't forget to like our channel, subscribe, and hit the notification bell so you never miss our content. So today, looking at the market, we see that we have behind me here our market monitor. So we see our top three coins being Bitcoin, Ethereum, and USDC. So looking good here, mostly green, just a few red behind me, but don't forget to check out our market monitor tool on our Vector platform, where, again, if you look in the description, you can find a link to a 15-day free trial of the Vector Pro plan. So getting into it, we have a lot of different news that came out this week, along with last week's Fed announcement of another raise of 75 basis points. Now, we can see that that is continuously going to keep growing and that their efforts are in terms to fight inflation. But what does that mean in terms of the crypto market and the whole financial state of the world? More and more regulations will be coming to crypto, as we can see, and we have SEC chairs saying that more cryptocurrencies are now claimed as securities versus commodities or assets. So we see that they have now listed AMP as a security, which means that a few exchanges that are centralized will be taking this off. So delisting them, with Binance US announcing that they will delist AMP following the claim that the token is a security. Following that, we actually have a lot of news going on with more hacking. We've recently seen that North Korean hackers have gotten into some fake crypto jobs, or looking for people who are applying to jobs and catching them that way. So phishing through job searches. And now we see that Solana is being hit hard. So over 7,000 wallets have been hit by hackers as of 5 a.m. on Wednesday. We also see that the CEO has said it looks like a supply chain attack based on solely iOS wallets. We don't exactly know what is responsible, who or what really is responsible for this exploit. This incident will continue occurring on more blockchains and more currencies here. So we see that hot wallets are considered less secure than cold wallets as they stay connected to the internet. Cold wallets, meanwhile, will store your private keys within an offline hardware layer. We always recommend being the safest possible, using a cold wallet to store your crypto and taking the harder route and going off decentralized fully. Along with more hacks, we see that Chain Analysis reports 2 billion lost in cross-chain bridge hacks. Research conducted by blockchain data platform Chain Analysis estimated that over the 2 billion was lost from cross-chain bridge hacks so far in 2022. They stated in the report that this issue now represents a significant threat to building trust in blockchain technology. Moreover, these researchers are saying that these bridge hacks are favored by North Korean hackers, who are estimated to account for half of the 2 billion stolen to date. So again, guys, these are really why we always stress our safety measures, risk management, not only in trades, but in a complete way. When we say anything that you're doing on the internet, you need to be careful. You need to be monitoring your data, making sure that you know everything that's occurring and that you're playing it safe, doing everything you can to remain as safe and decentralized as possible. Again, we see more and more every day occurring. This is not going to be an end. We know that hackers have been here since the dawn, and they'll continue to fight us. So it's important that we fight back in retaliation, being as safe as possible and just being aware so that we don't fall for those phishing links. But let's get into our next topic here with Ethereum. The blockchain has generated about 3.9 billion in transaction fees so far this year and has generated about 9.9 billion in fees last year. Last year's total was 1,558% more than the year before. With the report being published on Friday, we see that Bitcoin blockchain has produced around 93 million in fees year to date, compared with about 1 billion for all of last year. Bank of America says it's not yet able to forecast cash flows for blockchains because they are unpredictable in the nascent industry, but blockchain generate cash flows via transaction fees from validating native token transactions or by validating transactions from applications that run on top of the blockchain. So we see more and more institutional players expelling their interest in the cryptocurrency field, but we can foresee that many others will still continue to fight it and push for regulatory actions. Now, moving into some more exciting news, we see that Gucci is the first major retail store now accepting ApeCoin as payment. We see that Tiffany & Co. is now going to be launching a partnership with the NFT CryptoPunks, with their CryptoPunks pendants being 30 Ethereum each, estimated around 50,000 or more at the current time. This launch will happen on August 5th, so 2 days now from filming, and we can't wait to see what people think about the Tiffany & Co. CryptoPunks collection. We see many more companies, whether luxury or mainstream, falling into the NFT theme, getting into it now, and we can expect to see many more to come. We are just waiting for all of our luxury partners to start accepting Bitcoin, Dogecoin, and Ethereum. Now, getting into some more heavy news, we do have more layoffs coming, and I can foresee that this is just the start, even though we have seen it for the past few months now. So online trading brokerage Robinhood has cut headcount by 780 workers, or about 23% of its employees. This is in order to further streamline costs amid a continuing decline in monthly active users on the platform. We've seen large companies like Walmart, Amazon, Target also claiming that they have had negative quarters this year. This is something that we will continue to see until our supply chain issues are recovering from the major attacks and major factors that have occurred within the past few years. We can only expect to see more and more layoffs coming, especially from the tech sector of the world. We can continue to expect more financial crisis coming within the next quarter of the year. We see lots of companies still proving to continue with negative quarters and bringing more layoffs as they come. This also means that there's going to be a large recession in terms of jobs. Currently, we were one of the strongest markets here in the US for employment, but it seems to be declining as more layoffs are coming and more financial crisis hits the global market as a whole. Anyways, guys, that's really all we have for you today. We will continue to bring you more breaking news content, and stay tuned for next week where we're going to have a new episode of Around the Block where we'll go more in depth into some of these news and some more breaking topics happening in the market. See you next time. Again, don't forget to like, subscribe, and turn on your notifications. Don't forget to leave us a comment so we know where you're from and if you like the Vector platform. See you next time.